Hello, everyone, and welcome. I'm excited to kick off today's session with our first slide. Today, we're diving into finance and accounting essentials. This presentation is designed specifically for new finance and accounting hires, so whether you're just starting out or looking to refresh your basics, you're in the right place. Over the next few minutes, we'll cover key concepts, essential skills, and practical tips to help you succeed in your new role. So, let's get started and make this a valuable and engaging experience for all of you. Welcome, everyone, and thank you for being here. Today, we're going to focus on understanding the vital role that finance plays in both nonprofits and businesses. It's not just about numbers, it's about how financial health supports your mission, your growth, and your sustainability. Our objectives are clear. First, we want to help you understand the core accounting principles that underpin sound financial management. These principles are the foundation for accurate and reliable financial information. Next, we'll explore practical tools like budgeting and financial reporting. These are essential for planning ahead, making informed decisions, and communicating your financial status to stakeholders. We'll also emphasize the importance of ethical financial management. Upholding integrity and transparency in your financial practices builds trust and credibility. Finally, we aim to boost your confidence in using accounting software. Mastering these tools will make managing your finances more efficient and less intimidating. Throughout this session, I want you to see how all these elements connect to support your organization's success. By the end, you'll have a clearer understanding of how to navigate financial responsibilities with confidence and integrity. Now, let's take a closer look at the finance department overview. This department is quite comprehensive, with key areas including accounting, budgeting, payroll, and compliance. Each of these functions plays a vital role in keeping the financial health of our organization on track. When it comes to who you'll be working with, you'll primarily collaborate with the finance manager, who oversees the entire department, as well as program heads, to ensure financial alignment with program goals, and HR to handle payroll and related matters. It's also important to understand how reporting and communication flow within this department. Clear and consistent communication ensures everyone stays informed and aligned with financial policies and updates. You'll see how information moves from the finance team to other parts of the organization, creating a seamless flow that supports transparency and accountability. Overall, this overview highlights how integral the finance department is to our organization's success, connecting various functions and teams to support our strategic objectives. All right, let's take a closer look at what we mean by corporate finance. Essentially, corporate finance is all about managing a company's financial resources to achieve its goals. It involves understanding how to raise funds, allocate them wisely, and ensure the company remains financially healthy. One key aspect is the capital structure, which is how a company finances itself, either through debt, like loans and bonds, or through equity, such as issuing shares. Finding the right balance between these options is crucial because it impacts the company's risk and cost of capital. We also need to consider both short-term and long-term financial planning. Short-term planning focuses on managing day-to-day finances, like cash flow and working capital, while long-term planning involves strategic decisions about investments and growth. Investment and risk management are integral parts of corporate finance, too. This means evaluating potential projects or investments to ensure they add value, and understanding how to manage risks so that the company can weather uncertainties and stay on track toward its objectives. Throughout this presentation, we'll see how these elements connect to form a comprehensive approach to financial management that supports sustainable growth and stability for the company. Now, let's dive into some fundamental accounting concepts that form the backbone of financial understanding. First up is the accounting equation: assets equal liabilities plus equity. This simple yet powerful formula helps us see that everything a business owns is financed either through debt or the owner's investment. It's the foundation for understanding how financial health is balanced and tracked. Next, we have the different types of accounts. Assets are what the company owns, like cash, inventory, or equipment. Liabilities are what the company owes to others, such as loans or unpaid bills. Income accounts record revenue generated from sales or services, and expenses track the costs incurred in running the business. Recognizing these categories helps us organize financial information clearly. Moving on, we encounter double entry bookkeeping, which is a key principle. It means every transaction affects at least two accounts. Think of it as a balance where every debit has a corresponding credit. This system ensures accuracy and keeps the books balanced, giving us a reliable financial picture. Finally, there's the choice between accrual and cash basis accounting. Accrual accounting records income and expenses when they happen, regardless of when cash is received or paid. Cash basis, on the other hand, recognizes transactions only when cash changes hands. Understanding these methods is crucial because they influence how we interpret financial statements and make decisions. Connecting all these points, mastering these fundamentals allows us to accurately track, analyze, and interpret financial data. Key skills whether you're managing a business or preparing financial reports. Now let's take a closer look at the chart of accounts and how journal entries work. The chart of accounts is essentially the backbone of a company's financial system. It categorizes all the financial transactions into different accounts, like assets, liabilities, income, and expenses, each with its own unique code. These codes help keep everything organized and easy to track. For example, you'll see sample accounts like cash, accounts payable, or sales revenue, each assigned a specific code. This structure makes recording and retrieving financial data much more efficient. When it comes to recording journal entries, the key concept is understanding debits and credits. Every transaction affects at least two accounts, debit one and credit another, to keep the accounting equation balanced. For instance, if you receive a salary payment, you debit your payroll expense account and credit your cash account. Let's look at some common examples. A salary payment involves debiting expenses and crediting cash. A donation received would typically involve debiting cash and crediting your donation income account. Expense reimbursements are similar. They increase your cash or accounts receivable and reduce expenses accordingly. By mastering how to record these entries accurately, you're ensuring your financial records are clear, complete, and compliant. This foundation supports the overall integrity of your financial reporting and helps in making informed decisions. Let's take a closer look at the basics of budgeting. First, why is budgeting so important? Well, it's the foundation for managing resources effectively, ensuring that departments can meet their goals without overspending. A solid budget helps us plan ahead and stay on track financially. There are different types of budgets to consider. Operating budgets cover the day-to-day expenses needed to keep the department running smoothly. Then there are capital budgets, which focus on larger investments like equipment or infrastructure. And of course, project-based budgets are used for specific initiatives or projects, giving us clear financial boundaries for each effort. Now, building a department budget might seem overwhelming at first, but it's really about organizing your information and making informed projections. Start by gathering historical data, understanding upcoming needs, and setting realistic targets. This process helps you allocate funds wisely and prepare for uncertainties. When it comes to tools, spreadsheets are still one of the most versatile options. They allow for easy customization, updating, and analysis. But there are also many budget templates available that can streamline the process and ensure consistency across departments. Using these tools can make the whole budgeting process more manageable and less time-consuming. Overall, mastering these budgeting basics is essential because it supports the entire financial health of your department and aligns your resources with your strategic goals. Now, let's take a closer look at financial reporting and statements. These are essential tools that provide a clear picture of a company's financial health. First, we have the balance sheet, which shows what the company owns, its assets, and what it owes, its liabilities, at a specific point in time. It's like a snapshot of the company's financial position. Next is the income statement, often called the profit and loss or P&L statement. This document summarizes revenues and expenses over a period, revealing whether the company is making a profit or incurring a loss. It helps us understand operational performance. Then we have the cash flow statement. This one is crucial because it tracks the actual movement of cash in and out of the business. It provides insight into liquidity and the company's ability to meet its short-term obligations. Finally, there are budget versus actual reports. These compare what we planned financially against what actually happened. They're invaluable for identifying variances, understanding where we're excelling, or where adjustments might be needed. All these reports are interconnected. They give us a comprehensive view of financial stability, operational efficiency, and strategic performance. Together, they support informed decision-making and help us steer the business toward its goals. Now, let's turn our focus to internal controls and ethics, which are the backbone of maintaining integrity in our finance operations. First, preventing fraud and misuse is absolutely critical. We need to have systems in place that detect and deter any fraudulent activity before it causes significant harm. This is where strong internal controls come into play, acting as a safeguard for our assets and reputation. Next, approval workflows are essential. They ensure that any significant financial transactions are reviewed and authorized by the right people. This layered approach helps catch errors and prevents unauthorized actions, maintaining accountability at every step. Segregation of duties is another key concept. By dividing responsibilities among different team members, we reduce the risk of any one individual having too much control. This way, we create a checks and balances system that makes it much harder for fraudulent activity to go unnoticed. Finally, fostering ethical conduct in all finance roles is non-negotiable. It's about building a culture where integrity is prioritized and everyone understands their responsibility to act honestly. When ethics are embedded in our daily routines, it reinforces trust and supports our overall compliance efforts. Connecting all of these points back to our broader theme, they serve as vital pillars that uphold transparency, accountability, and trust within the organization. Strong internal controls and a commitment to ethics aren't just policies, they're the foundation for sustainable success. Now, let's take a look at some of the key tools and software that can really make managing your finances easier. When it comes to common platforms, you'll often hear about QuickBooks, Xero, and Excel. These are popular for a reason. They each offer unique features that help you keep track of your financial data efficiently. Excel, for example, is a versatile spreadsheet tool that many businesses use for tracking expenses, income, and cash flow. It's customizable and widely accessible, making it a great starting point for many. Speaking of spreadsheets, they're a fundamental part of financial tracking, providing a simple way to organize and analyze your data over time. Moving beyond spreadsheets, there's an exciting world of financial dashboards. These dashboards give you a visual overview of your financial health at a glance. Think graphs, charts, and key metrics all in one place. They're incredibly useful for quick decision-making and spotting trends early. And in today's digital age, cloud-based accounting tools are becoming the norm. These platforms allow you to access your financial data from anywhere, collaborate with your team easily, and keep your information secure. They also often integrate with other software, streamlining your entire financial management process. Altogether, choosing the right tools depends on your business size, complexity, and specific needs, but leveraging these platforms can significantly improve accuracy, efficiency, and insights. This ties directly into our overall goal, making financial management simpler and more effective for your business. Now, let's talk about compliance and financial policies, which are essential to keeping everything running smoothly. First, donor and grant compliance is really the backbone of maintaining trust and integrity. It's about making sure we're meeting all the requirements set by our funding sources, which helps us stay in good standing and secure future support. Next, audit preparation is a critical part of this process. Being ready for audits means keeping thorough, accurate records and having processes in place so that when auditors come in, everything is transparent and straightforward. Filing deadlines are another key aspect. Missing them can lead to penalties or even jeopardize funding. Staying organized and aware of these deadlines helps us avoid unnecessary complications. Finally, expense policies and thresholds guide how we handle spending. They set clear limits and approval processes, ensuring that our funds are used responsibly and in alignment with donor expectations. All these elements connect to the bigger picture of maintaining accountability, building trust, and ensuring our organization's long-term success. Now, let's take a look at some of the typical tasks that interns might be involved with during their internship. First up, assisting with monthly bank reconciliations. This is a crucial process where we compare our internal records with the bank statements to ensure everything lines up correctly. It's a great way to understand how our financial data is validated and maintained. Next, preparing journal entries. This task involves recording financial transactions into our accounting system, which helps keep our books accurate and up to date. It's fundamental to maintaining the integrity of our financial data. Reviewing vendor invoices is another key responsibility. Interns learn to verify that invoices are correct and match the goods or services received, which helps prevent errors and ensures timely payments. Drafting financial summary reports is also part of their role. These reports provide a snapshot of our financial health, helping managers make informed decisions. It's quite rewarding to see how these summaries support strategic planning. Finally, organizing digital financial records. This task involves managing and maintaining our electronic documents, making sure everything is easy to find and secure. It's about developing good organizational habits that are essential for efficient financial management. Overall, these tasks give interns a practical look at the day-to-day operations of finance and accounting. They're not just busy work. They're foundational activities that build the skills needed for a successful career in finance. Now, let's talk about the importance of shadowing and supervision in our training process. First, each participant is assigned a dedicated mentor or a finance officer. This person serves as your go-to resource, guiding you through the practical aspects of your role and providing ongoing support. Next, we have a structured training schedule that includes shadowing opportunities. Shadowing allows you to observe experienced team members in action, which is invaluable for learning the ropes and understanding how things work in real time. Feedback and weekly check-ins are also a critical part of this process. These sessions give you the chance to reflect on your progress, ask questions, and receive constructive advice to improve. It's all about continuous improvement and making sure you're on the right track. Lastly, we encourage peer learning opportunities. Connecting with your colleagues not only fosters teamwork, but also enables shared learning, where you can exchange ideas and solve challenges together. Overall, this approach to shadowing and supervision is designed to build confidence, deepen your understanding, and integrate you smoothly into our team, reinforcing the overall goal of developing well-rounded, capable professionals. Now, let's talk about how we'll evaluate success and support your ongoing development. First, we want to define what success looks like in this program. Essentially, it's about your ability to apply the skills you're learning and to deliver tangible results. You'll be responsible for certain deliverables throughout the internship, which will demonstrate your progress and understanding. In terms of skills to develop, we're focusing on critical areas like Excel, forecasting, and reporting. These are foundational tools that will help you analyze data more effectively and contribute meaningfully to our team. Remember, this is not just about completing tasks, but building competencies that you can carry forward in your career. Once you've completed the program, there's the opportunity to earn a certification or receive a recommendation. This can serve as a valuable credential for your resume or LinkedIn profile, showcasing your skills and commitment. Overall, this slide highlights that success isn't just about finishing the internship. It's about growth, skill development, and setting yourself up for future opportunities. Now, as we wrap up, I want to emphasize that support is always available to you. Feel free to ask questions at any point. There's no need to wait until the end. Whether it's through Slack or email, you have access to a contact list that makes reaching out quick and easy. We've also provided training documents and shared folders that you can reference whenever needed, so you have resources at your fingertips. Creating a supportive learning environment is a key part of our approach. We're all here to help each other succeed. Remember, no question is too small, and your curiosity helps foster a collaborative space where everyone can grow. So don't hesitate to reach out. Your support network is just a message or email away, and we're committed to guiding you every step of the way. Thank you so much for your time and attention today. Before we wrap up, I want to go over the next steps to ensure everyone is clear on what comes next. First, please make sure to sign your NDA and the offer letter. That's essential for moving forward smoothly. Once that's done, you'll want to join the upcoming orientation call, where we'll go over everything in more detail and answer any questions you might have. And finally, start engaging with the training modules. These are designed to set you up for success and help you get up to speed quickly. Remember, these steps are the foundation for your onboarding journey, and they connect directly to our overall goal of making this transition as seamless and productive as possible. We're excited to have you on board and look forward to supporting you every step of the way. Thank you again, and I'm looking forward to seeing your progress.